Hi everyone. Today we did get a gap up and then a bit of a nothing burger after that. You can see gap up here, hit some key resistance zones in this area, and then we ended up pulling back to the 21 EMA and then fading into the after hours. But let's take a look at all of the charts and see if we can find some direction for tomorrow with this kind of weird triangle pattern that we're seeing right now. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. In news today, we got Nvidia announcing they are going to push a $500 billion investment into the Texas area. They've already started building in Phoenix at Taiwan Semiconductor, but now we are trying to have another plant in Texas as they highlight here. And supposedly this is because of the high reciprocal tariffs on basically the rest of the world. And now this infrastructure is hopefully coming to the United States in this manufacturing partnership over the next 4 years. So they're trying to get it done during the administration. Again, if this comes true, this is another great investment in American manufacturing and gives us some geopolitical safety when it comes to potentially getting other countries like China potentially turning off our accessibility to these kinds of chips, and the 32% tariff placed on Taiwan as this part of reciprocal deal. So interesting, you like to see it. We also did get an exemption over the weekend on a lot of tech giants to include computers and cell phones, and Apple is benefiting from that. So chips are actually exempt, and like I said, computers and smartphones also part of this exemption. But even regardless of that, we have Nvidia coming to Texas. Moving over to fear and greed, we finished at a 19 up from a 12, so the market conditions continue to improve here just a little bit. Momentum and strength and breadth all still in extreme fear, so all three of the majors still in extreme fear. Put call ratio continues to pull back, so just a little bit of fear coming out there. Volatility back into the 30 range, neutralized if you want to call it neutralized, but I would still say it's relatively elevated. Safe haven demand still negative, but I would expect this to kind of grind up towards that zero level. Stocks and bonds have not been performing super well recently. And then junk bonds still flat here in regular fear. So still fear pretty much across the board except for what they're calling neutral here on volatility. Moving over to the economic calendar, really nothing for today. For tomorrow, you don't have a whole lot either. But on the Wednesday, we do have CPI for the Eurozone and then that retail sales number that is going to be interesting. If it actually improves to a 1.4, that's going to be a really strong move. Want to see the consumer continuing to stay strong. And then 20-year bond auction. Want to see this come down a little bit, honestly. Down back into the kind of 4.4 area would be interesting. And then you got Fed Powell speaking in the afternoon there as well. So really nothing here early in the week when it comes to economic data. Moving over to earnings, we did get good earnings from Goldman Sachs. They beat on both. And then for tomorrow, we got J&J, Citigroup, Bank of America, United Airlines. The next day, ASML. Definitely want to see how they're doing. Abbott Labs, Progressive, US Bank Corp, Travelers, and then we do start the tech earnings here with Netflix on Thursday. United Health, still interesting, but we're starting to get into those earnings. And the big thing here with these earnings is that they are going to give us some kind of guidance. Who knows what it's going to say, but I think that's going to be the most important part of earnings this season. Moving over to Max Pain. Can we actually get a Max Pain finish at 550 for the week? It does seem like that is getting to be a little bit more possible. I still think we can get above 540 for the end of the week. Probably not above that 550 range, but between 540 and 550 still gives you the opportunity for about 2 to 3% of potential upside from here. What happens after that remains to be seen, but there are a lot of puts in here. If we continue to see this current geopolitical risk, I think we can absolutely get back above that 540 level. Moving over to the charts, starting off with the S&Ps here, you can see we do continue to bounce towards that 21 EMA, this low consolidation resistance area around that 550 level. 21 EMA is there at 549.18. I still think this is going to be a major zone of resistance. We had the consolidation, the massive breakdown. We're retesting that. If we do get a continuation lower, it would not shock me to get this push back into that 480 area, but this week I think we're going to get consolidation, maybe a slightly more bullish push here just based off that Max Pain. Does it happen tomorrow? Probably not. It looks like markets want to fall here a little bit. After hours, they're down about $2, but I just don't see us falling too far with that Max Pain with so many options in the markets, so many puts to be holding up markets at current prices. But you do have to keep in mind this kind of price action here, right? So you have a high slightly lower high here. We couldn't quite get to that zone, and then we ended up falling here into the after hours. We did get back above the 200 though, which is very important. 535.22 is the current level. If it can hold above there, that's going to be a nice indicator. Momentum currently bearish, RSI currently bearish, so you do have to be concerned there. And then looking at that daily chart, the momentum is still stepping to bullish, so you have mixed signals, which is part of why I think we're kind of getting this consolidation, this kind of wedge pattern, which tomorrow seems like we're probably going to go a little bit lower, maybe into this kind of 528 area. And then putting the levels on, you can see my level here, 535.72. We held above that level. As long as we continue to do so, you can trade bullishly from that level. But then you can see here we could not hold above 540.90, and then right at the end of the session we came right to that level, threw a big wick to it, and then rejected from there. So that is concerning. Still in this kind of choppy zone, clean levels to both sides, no clear direction between 535 and that kind of 540, 541 area. Then moving over here to the Tasty charts, you can see we got very, very close to that 21 EMA at 545.64. Right in here, still very much bearish conditions, very little volume, but we did hold above the 8 EMA there at 533.13. So again, mixed conditions, technically bullish above the 8, but bearish below the 21, bearish trailing stop. And that trailing stop right now is 559.74. Maybe we see a push to that level, reject from there, and then kind of finish just below the 550 area. I think that's certainly a possible scenario. And then looking at that 4-hour chart, you have the 89 EMA, which was resistance here. Once again, being resistance in today's session, that's the 544.99 area. Couldn't quite touch it on that 7 o'clock candle. Tried again the next time, didn't touch it again, and then we're rejecting from there. Current support is that 55 EMA at 536.21 on the 4-hour chart. You can see it right there. We're right at it. Is it going to hold and then push to that 89? Or is this structure going to break down and then we could push back down to that trailing stop, which right now is 506.23, so bullish conditions on the 4-hour chart, but bearish on the daily. Moving over to the NASDAQ was also up about $3 or 0.68. Hit that 21 EMA. The high of day was 465.05. The 21 EMA is 565.18. So we're going to call that a touch. Pretty much the same resistance that we got to here on Wednesday last week. Touched that zone. And then again, we got here and rejected from there. So for me, slightly bearish. You do have plenty of support in this area. And then you could see an easy move right back to these lows here between kind of 447 and 449, 450. I think somewhere in there makes sense. Momentum still technically bullish, so we're holding in there. You can see we came back and tested the VWAP, tested the trend line here. You got a couple of levels in there to work with as well. And then looking at those short time frames to see those levels a little bit better, you can see the trend line. This is what I was watching in here kind of intraday. The trend line was at 452.56 or so. We bounced from that level, did briefly get above 459, and then eventually we broke back below it, and then we had a nice little continuation lower. This was actually a really good trade here for me. Looking at it here briefly on the 5-minute chart, you can see we got above it, traded this to the long side, made a little bit there after the break above that level, and then you can see it here on the RSI. We broke below the RSI here at around 1415, 1420, and then we did get a little bit of a spike up, sold some calls in here, and then we waterfalled off and made a little bit of money there. So if I had sold the shares, would have definitely made a lot more. That was a nice move of about $3 to $4. Really nice move from there, but that was an important level. Once it broke here on that candle, there was no turning back, and it did continue to sell all session right back to this kind of consolidation low, session lows in the after hours. So structurally, not very good on the short time frames. But going back to that hourly chart, you do have the 55 EMA still there at 453.89. Then looking at the Tasty charts here on the 4-hour, you can see that same 89 EMA continuing to be resistance right in the 462.28 level, tested that level and then immediately sold off. 9 EMA and 55 EMA right in the same zone there, 453.73 and 453.91 right in here, waiting to see if that zone holds. In the after hours, we're kind of slipping through that area. So again, this looks like a major resistance. If this area breaks, you could absolutely see a move back to that trailing stop around the 426.28 area. So not a ton of volume, didn't expect a ton of movement, but for me, this is a little bit bearish off a key resistance here. Moving over to the Russell and the Dow. The Russell was up about 1%. The Dow was up a little bit less there. Momentum on both of these still doing okay, swinging towards the bull side. In terms of levels, 185.63 gapped above that level, filled the gap, and then held it on a closing basis. So that looks okay. I want to see actually, is this holding in the after hours? Pretty much. We're still above the level just by a few cents. We pulled back to it here. If this breaks structure in here, that's going to be concerning. The short time frame does have a very similar structure to what we just looked at on the previous. It does look a little bit better than the NASDAQ, so that's good. And then looking at the Dow, same thing here, 404.47, held above that level, still can't get above the 21 on the daily, so definitely mixed signals on both of these, but somehow the NASDAQ did underperform. Moving over to Apple and Microsoft. Apple had a huge move right to these consolidation lows, right to where we thought we were going to end up, and immediately rejected from there. The level was 211.55, and we opened the day at 211.44, so just about 10 cents lower from that area, and then pulled back. Momentum still bullish, RSI still bullish. This is obviously on the back of that tech exemption from tariffs, which it seems like everything is getting an exemption at this point, but good for Apple, good for markets today. Microsoft was actually down on the day, 0.16 or 64 cents. Momentum still bullish. We're still in this consolidation range. On a technical basis, we're still in this same consolidation, not quite as where Apple has not quite recovered back to that same range. Does Microsoft have a little bit of relative strength? Potentially. Moving over to Nvidia and Tesla. Tesla's up only 4 cents, so in the same consolidation range. Really no change to the thesis there. Nvidia, on the other hand, did get back up to the highs from Wednesday and then rejected from there, finished negative on the day, down 22 cents. At this point, if I had to guess, I would say this overhead resistance here is going to be too much. So you have trend at 117.70 or so, my level 116.70, 55 EMA to the upside there at 119.27. I just think there's going to be too many sellers in this kind of zone here. You can see the consolidation zone there as well. Momentum still good, RSI still good, but just seems like we're really struggling in this area. We haven't even really tested it yet, and I would expect if we did get there, we're probably going to pull back fairly dramatically. Moving over to Meta and Broadcom. Meta had a terrible day, down 2.2%. This continues this downtrending structure, and this is part of what I think is going to happen to the broader markets eventually. In the short term, I still think we're okay, but look at this, breaking below my level, 539.77. The next one is 520. Can it get there? Probably. Then the next step would be back to these lows here, where markets are well off of their lows. Seems like Meta is headed in that direction. And then you can see Broadcom was down about 2%. Again, hitting a key zone of resistance. I just don't think semis can continue to lead us to the upside. Structurally, it still looks okay. Consolidation, breakdown, bounce. If it can hold here and push, that's bullish. If we reject from this kind of consolidation low, which is the 184.81 level, which is what we tested again here today after testing it on Wednesday last week, then that's going to be quite bearish. So keep an eye on both of these. I'm watching semis quite closely. I think they're going to give us some good clues about where the market is going over the next couple days to potentially weeks. Moving over to staples versus discretionary. Staples continues to be a great place to be, up 1.71%, pushed through that trend line, tested the 81.85 level. Seems like we're going to get above that this iteration. Had a nice push, huge dip with markets, but then we continue to go higher here, and we continue to do so today. Discretionary is not so much, 0.29 to the upside. Did hold above the level, 189.38 was the level. We closed above it Friday, held above it today. Can we get above 193.81? Maybe. You got that 21 EMA as overhead resistance still at 194.77. So critical zone here. We're going to see if this rejects. It's also the same consolidation low that we've been talking about back here through mid-March. Moving over to breadth. Breadth actually does continue to improve this week. You can see a pretty solid gap up into those key zones of resistance. We hit that 30 area, hit the 21 EMA. I still think we can go a little bit higher here into the 50 range. That's this kind of consolidation peak that we had. Can we get this high into the 70s? Maybe, maybe not, but I think the 50s is absolutely doable, and then I would expect to see some selling come in from there. Same thing here really on the 50-day breadth, somewhere between 30 and 32. I think we can go a little bit higher, maybe as high as 40. Wouldn't expect to get too much higher from there, and if we did get into the 50s, that is going to be a pretty good selling opportunity in my opinion. Moving over to the dollar actually managed to stay pretty flat. So we were down just 0.14, and then here for the Tuesday open, we're back above that 99.83 level. You can see it here gapped up, starting to rally a little bit. You still have overhead resistance there at 99.93. We'll see if that rejects, but nice little consolidation bottom. Seems like the dollar is starting to round to the upside. So a little bit of dollar strength that should allow markets to stabilize. I think part of the reason markets were a little bit spooked was this really aggressive selling that we were seeing into the end of last week for the dollar. Broadly, a lower dollar should be good for trade, should give us a little bit more opportunity for trade on the global market. Not so much buying power, but in terms of being able to sell things with exports, that should be good. And this has been a bit of a byproduct of that tariff news that we've been getting. So we'll see. Dollar seems to be gaining a little bit of strength, and that's continuing to happen here on the Tuesday open. Moving over to bonds, J&K was up about 0.5%. Again, you like to see it. Consolidation, gaining a little bit of strength. Still very much a short-term downtrend. Still very much a medium-term consolidation. So nice to see that. Want to see bonds continue to stabilize. TLT was up about 0.7% as well. Momentum stepping to bullish after the nice bounce off the 85.90 level that we saw on the Friday session. So nice little opportunity there. I said if we got into here, I thought this was going to be an absolutely great buying opportunity. And so far, so good on that thesis. I still think this is going to go back to the $100 range eventually. Maybe not as soon as I thought that it might originally, but I still think it will go there. And for right now, you do have a nice bottom off of that 85.90 level. Moving over to the VIX has finally fallen back down into this kind of consolidation range. You can see we touched a bunch of wicks there at the current levels, and now we are still holding above it at 30.88. Momentum still bearish, RSI still bearish. We'll see if we pull back to the 21 maybe at 27.50, get a little bit more bullishness out of it. Either way, momentum says VIX should pull back slightly. The next level for me is this kind of 28.89 area. Just below it's the 21, and then I have a trend here as well at 26.39. So either way, looks like the VIX is set to go a little bit lower. We'll see if that continues over the next day or two. Moving over to my accounts, I did pretty well on the session. I could have done a little bit better for sure. There was a couple of trades that I didn't execute perfectly, but either way, made a little bit of money, getting closer and closer to break even on the year. A little bit frustrating that that's the position that I'm in, but still outperforming the market fairly substantially. Markets are down several percentage points on the year, and I am not. So trying to make a little bit of money every single day, and today was a good day. Not great, but good. In terms of positions, obviously I don't have anything on overnight. I was short into the market close and I took it off, and that was not the best decision. Could have held it more. You can see we're down about $2.50 in the after hours, so that's a little bit bearish. We'll see if that continues. And I do think that that is the correct thesis, at least for the short term bearish going into tomorrow's open. And then we'll see if some of those levels hold or not. If they do continue to break down, obviously the thesis will stay bearish. Let me know down in the comment section what you thought of markets today. What do you think of the tariff exemptions? What do you think of Nvidia coming to Texas with $500 billion in investment? For the United States, it seems like every other week we have a company saying they're going to invest $500 billion over the next 4 years. Hopefully that all comes true. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.